So we're going to get ready here in a couple of minutes. I'm really glad. This is one of my favorite webinars to do. And one of the reasons it's one of my favorite webinars to do is years ago when I was an agent out in the field. I sold health insurance and life insurance. And one of the top producers with John Hancock, I was a pretty good producer, but my district manager set me up with one of the top producers at John Hancock because he thought I could learn from the next level. And this guy was a multi-million-dollar producer, and this was back in the 80s. And he showed me about selling, and this is just when IULs were coming in. He showed me about annuities. And I was so intimidated. And all through the 90s, I was so intimidated by that high, what everyone called the high net worth clients. And I just didn't think I was either smart enough or knew enough. I didn't think the prospects would have enough respect for me. I didn't have enough street cred or, whatever nonsense was going on in my mind. But I was really intimidated by that market. And a few things changed for me. One of the things that changed for me is some of the producers that I worked with that were doing really well in the business. And when I actually rode with them and saw what they were doing, I realized they're not all that smart. Most of what I needed to know, I already knew because it had more to do with relationships than it had to do with product knowledge. So I started studying the law, studying the regulations, studying things about Social Security, and became pretty proficient with that. And that helped me turn my business around. So one of the reasons this is one of the webinars that I like to do the most is it's a subject that's near and dear to my heart. It's the way that I became a $1 million a month producer in annuities, along with all my other business, because it was so easy to do. And the reason it was easy is because I was willing to face my fear about approaching that market. And there's some things that are predictable about that market that I didn't realize. And once I realized that those things are predictable, it wasn't a big deal to get in the market at all. In fact, I think in the 90s, Tim, is when you started messing around with financial calculators and stuff like that, right?
Yeah. Yeah, way back in 1993, 94. America Online, CompuServe. There was no internet.
You mean that little dial-up?
Yeah.
Yeah, that's so funny. Well, why don't we get ready to jump on board? If you are expecting to get on a webinar for how to sell annuities using Social Security strategies, you're on the right webinar today. Tim Turner is one of your hosts. I'm Lloyd Lofton. I'm going to be your other host. So let me drop this down and let's kind of focus on this.
All right, let's go.
Here's what I want you to do, guys. I want you to put your phone on mute. If you're like me, I sit in on a lot of webinars. And to be honest with you, what I do on these webinars, I register for them. The webinar starts. I drop it down on my desktop, and I'm doing my emails and proposals. I'm doing all kind of stuff. And what I'm doing is I'm just listening for the buzzwords. If that's you, stop doing that. Get rid of your email. Get up and close your office door if you have a home office or if you're at your work, and just focus on this. You deserve the time to get the information that you signed up for today, because this is going to turn your business around. So get a pen and paper out, because I'm going to ask you some questions. We're going to ask you to answer questions in the chat box, and focus. Because the information you're going to get today is going to be extremely valuable. It's going to change your business if you follow what we tell you to do today. So who benefits from this webinar? Well, if you've had clients who pay taxes on their Social Security, or maybe you've got clients that you don't know how to find out if they pay taxes on their Social Security. Or maybe you do. Maybe you know enough about it that you can figure it up and you give them great facts. You know how it is. You got them under the ether, you give them great facts, and their eyes glaze over. You know that you've lost them, right? Or maybe you're the agent that you keep getting the I need to think about it, and you actually believe them. but it never turns into a sale, does it? So if that's you, you're going to benefit from this webinar today. Why are you going to benefit? Well, here's what the agenda is. We're going to show you how to illustrate the changing nature of retirement for your clients that's happening in the marketplace. We're going to show you how to illustrate for your senior clients how to visualize their ideal retirement and consider the realities and roadblocks to retirement savings that they may incur. In fact, I thought about changing the word they may encounter to they will encounter, because they're most likely will encounter them. And you're going to learn how you can demonstrate for your senior clients how to estimate their living expenses and calculate how much they need to save to retire comfortably. And comfortably is their definition of comfortable, not ours. So just imagine you're sitting at your client's office or home, and you've asked the questions where you uncover the fact that they're paying taxes on the Social Security. In fact, you build a relationship where they actually share with you money they have in money market accounts, and you find dormant IRAs. They share with you returns they've gotten in the stock market and the money they have left in the market. You've heard how the market's always going up and down. And you see the potential to save them thousands of dollars in taxes while protecting their assets and guaranteeing their retirement. And they have agreed with you all along the way. You're right, Lloyd. You're right, Mike. Tom, I didn't know that I could do that. Yes, Bill, we need to take care of this. And you just can't close them. Imagine if you had the ability to flip your laptop around, put it in front of them, ask 5 or 6 basic questions. They enter their own information in. And when they look at that screen, their eyes pop. They lean into it. And they say to you, Tom, how do I do this? How can I get this result? Imagine that happens to you on your next call. Here's my promise to you today. That's exactly what Tim and I are going to show you how to do. Listen, in 2018, you decide how much money you left on the table. If an average annuity commission is, including renewals, is like $5 grand, and you left 5 sales on the table, you left $25,000 behind in 2018. If you had 15 prospects that you approached, you asked open questions to, you drilled down with them, you invested your time, resources, and money to get in front of them, but you couldn't get them closed, you left $75,000 on the table. What's your number? Type in the chat box right now and tell me, how many prospects did you have this last year that you didn't close? How many, in fact, here's another question for you. How many prospects did you have this last year that you didn't even think about bringing up annuities because you were nervous about it, or you didn't feel like you knew enough about it, or they told you they have a stockbroker and you were intimidated and thought, well, you know, I can't compete with that. Is it 5, 10, 15? Look, if you made $5,000 on annuity and you had 25 prospects in the last year, that's only 2 a month. Then you left $125,000 sitting on that table. And you know, I know, what did Grandma say? If it's too good to be true, just cut that in half. Maybe it wasn't 125,000. What if only half of that money you left laying on the table? What if you actually left over $60,000 or $70,000 laying on the table? I mean, my gosh, 10 times 10,000 is $100,000. Too many. That's why I'm on a webinar. I'm excited about this webinar. What will we talk about today? You know, great answers. And that's exactly what we're going to show you how to do in 2019. We're going to show you how to avoid that. And one of the reasons we're going to show you how to avoid that is because you know the sales myths. Listen, I know as an agent, I went to trainings with my managers, and you know what carriers do. Every time they have a new product come out, they want to do this big training. And they tell you that this is what you need to say to close the sale, right? And so your manager told you that if you tell prospects what retirement risks they have, what would they do? In fact, your manager told you if you tell prospects Social Security might not be enough, what would they tell you the prospect would do? In fact, the carrier told you that if you tell prospects they may have higher living expenses, what they tell you the prospect would do. And other agents, the big shots, right? The big producers, they said, well, just tell the prospects how you can help them not outlive their money. In fact, isn't that what's in the email marketing that you get all the time from broker dealers? That they're going to tell you what to say to tell the prospect that they won't outlive their money? And you know what? When you tell them that stuff, they never buy, do they? We're told that if we tell people this stuff, these are the myths that we have in sales today.
It's crazy. It's ridiculous.
It is ridiculous. And it's what's ridiculous, Tim, is that everybody repeats it. Everybody repeats the same darn mistakes. But guys, ladies and gentlemen on this call today, if you've been down this road, then you're obviously here today because you now know that stuff doesn't work. In fact, I can promise you this, you're on the call today, not because you need more training, but you need better training. And that's exactly what you're going to get today. So here's my question for you. If we show you how to use the simple step-by-step rules that get your prospect to share their biggest retirement concerns so that you can then illustrate the exact concern that they expressed, and then they can apply those rules in their illustrations themselves in real time to choose the exact solution they want while helping you package the right product from them, then do you think maybe you should commit to put in practice and test at least one of the rules that we show you today? Is that fair to ask? Type in the text box and tell me if you think that's fair to ask. So if we show you the exact questions you need to ask your prospects to uncover the needs that they have, if we show you a way to illustrate the exact problem that they want to solve, and you can package the right product for them, do you think that you should take at least one of those concepts and try it out? So everybody's agreeing. Everybody's agreeing.
Oh, yeah, we're getting lots of yeses. Yes, that's fair. Yes, yes, yes. A lot of responses.
All right, great. Yeah, I agree with you. You know, this is a smart crowd. Listen, stick around until the end. And you're going to receive a free download. You're going to get my article, The 7 Ways Annuities Can Solve Your Clients' Financial Problems. And I think Tim's got a special bonus for you.
Yeah.
So stick around to the end. So let me tell you a little bit. Let's get the housekeeping out of the way. Let me tell you a little bit about myself. So my name is Lloyd Lofton. I started with John Hancock in 1977. In fact, the tax-sheltered annuity had only come out a couple of years before I started in the insurance business. And I was the top tax-sheltered annuity seller in the Southeast region in 1977, 1978, 1979. I've got the plaques right here still on my wall. And I was a debit agent. So I know what it's like when you're early in the business to have bills. I know what it's like to have to put gas in your car. I know what it's like to have a house payment, a car payment, to have to put braces in your kids' teeth. I know what it's like to have to pay for that soccer. And you know, when the school tells you, or your kids says they want to sign up for soccer, it's never the $75, right? You got to buy the uniform, the shoes, you got to buy all the nonsense that goes with it. I know exactly what that's like because I struggled with that in my early years. But I did pretty well. I was pretty aggressive. I was willing to risk failure to succeed. And I left there in 1980 as a sales manager. And I went across the bridge to St. Louis. So I was in Alton, Illinois, went across the bridge to St. Louis, and I worked with Combined Insurance Company. They recruited me over there, first to be a field trainer, and then to be a regional. And what I learned about being a field trainer and then a regional is that salespeople always make this mistake. Salespeople sell the way they buy. So salespeople figure up the price of a product or service, and if that price is more than they're willing to pay or more than they can afford, they tend to project that onto their prospect, and they won't even talk about it. That's why so many salespeople don't get into the annuity business. And managers, they make the mistake of training agents the way they sell. And the problem is I sell the way I sell. I don't sell the way my manager sold. So I did very well there for a long time. I ended up leaving and started my own agency. I had my own team. Uh, so I ran my own broker-dealer agency. That was a great experience. I did a lot of seminars. I trained a lot of agents in seminars. I traveled all over doing that. I'd go to North Carolina and teach agents how to do seminars for seniors. And then I got recruited by American Republic Insurance Company to help run the career agent distribution. We had 2,000 agents. We had 69 managers in 35 states. We did $1.2 million a week, $55 million a year in business. The senior vice president of the company said, Lloyd, I truly believe that you're making a huge difference in the lives of many agents and managers. I appreciate your dedication to duty, the type of person you are, quality and top notch. I ended up running the call center with them. So I've been interviewed by the Wealth Channel. I've been through American College. I've been interviewed by Annuity News Now. Well, let me tell you where I'm at today. I'm a member of the National Speakers Association. I speak at industry events all over the country. I write articles for industry-related magazines. I'm a contributor to some magazine almost every month. Advisor in magazine, Insurance Selling magazine. You always find my articles out there. Organizations use my training material. The Law Professors Blogs Network, they use my material. I wrote an article on beneficiary wording. So these are all lawyers that belong to this Law Professor Blogs Network. And you see on the last sentence here, it says, special thanks to Jim Hillhouse for bringing this article to my attention. And it's my article that he brought to all these lawyers' attention. This happens all the time. My book is sold around the world, so I don't know what this is. If you know what 299 KR is, type it in the text box and let me know. But I don't know if this is Sweden or Middle East or Europe or wherever it is, but my book's sold all over the world. But you can just go to Barnes & Nobles and get my book. I'd love to connect with you on LinkedIn. So after the webinar, not now, after the webinar, go to LinkedIn, type in Lloyd Lofton. I never say I don't know people. I'm more than happy to connect with you. I have a big network, and you can stay in touch and see the great things that we're always doing out there. Now, I want to introduce my partner in crime here, Tim. Tim, why don't you give me a little idea about your background?
Okay. Hey, yeah, this is Tim Turner. I'm kind of a little different than Lloyd, obviously. I'm more of a tech guy, electrical engineer. I started Torrid Tech way back in 1993. We were talking about this before, back in the CompuServe and America Online days. And then in 1994, I created a website, and that was really early. And to do some marketing for our software, I created the first retirement calculator online. And during the 90s, I expanded that and created the first Social Security estimator that ran online way, way before anybody else. I created the first risk profile analyzer, the first Roth conversion tool, all these different tools, college savings. And some of those you can see today in action at various websites. If you go on this slide here, it shows you some companies that have licensed our software over the years, some big carriers. And I'm also a 2-time Amazon best-selling author. These are my 2 books, Make Retirement Simple and Your Retirement Made Simple. Both of them are more consumer-oriented, but you know, I am an Amazon best-selling author. And also, by the way, I'm an attorney, which may seem kind of odd, but
No, wait a minute. You always downplay the fact you're an attorney. Listen, one of the reasons why I work with Tim is because he's an attorney. And the reason that matters to me is that when I'm working with clients and I'm showing agents how to illustrate the problems that people want to solve, I never have to worry about the accuracy of the results that come from that software, because I'm working with an attorney who knows the law, researches it, makes sure that everything stays up to date all the time. So Tim downplays the attorney because he likes doing the programming stuff, but him being an attorney is one of the biggest reasons why I worked with him. I'm sorry to interrupt you, Tim.
no, that's okay. Yeah, helps me, you know, designing these planning tools and understanding the tax law and whatnot. And working with compliance departments, that's another thing. But another thing that I've done is, you know, so we've been doing Torrid Tech since 1993. It was kind of part-time at the beginning, but it's been at least 20 years of talking with advisors. So I've had thousands and thousands of conversations with advisors and agents. And, you know, from those conversations, it's helped shape the different softwares and programs that we've used so that you can, you know, be better when you meet with prospects, when you meet with clients, when you want to address their concerns and show them what they need help with. So what's next, Lloyd, on the slide there? Okay, yeah, so I built systems for all these Fortune 500 companies, Pacific Life, Mass Mutual, Sun Life, Janus, TIAA-CREF, all these different companies. And then, yeah, helped agents and advisors learn how to close more, because the way some of our tools have evolved is an advisor gets on the phone and says, hey, if your thing could do this, it'd be really great if I met with someone. I could show them such and such. And I'd be like, oh yeah, tell me about that. And then we learn from that and then adjust what we're doing. So thousands and thousands of conversations like that help us develop better software. You can also connect with me on LinkedIn, and be glad to connect with you there. You can look me up after the webinar. Don't do it now.
The reason I was slow on doing the slide, I was reading some of the comments. So I want to give a shout out to Tom. So Tom's an old friend of mine. We worked together years ago to American Republic, and some other comments. So really good comments on there. So listen, let's dive in. Let's get started. I want to make the most out of your time for you. The first thing I want to tell you is this is not your brand. Seniors are not your brand. This is your audience, your prospects, your target market. And there's a difference. Your brand should be the results that you bring to your audience. So since we're going to talk about how to use the software program and the retirement training, the Social Security training to convert your prospects to make more money, let's kind of get a foundation of what annuities are out of the way. The principal use of an annuity is a scientific liquidation of capital. So what happens is a sum of money is deposited and allowed to accumulate, deposited with an insurance company. A series of payments is then available to the owner, that's the annuitant. They can be withdrawn over a period of time for a lifetime or a combination of the two. And annuity payouts are based on the mortality of the individual and an expected rate of return on the deposit and the law of large numbers. So like life insurance is designed to protect against dying too soon, annuities are designed to protect against living too long. So we really only talk about two annuities, the immediate annuities and deferred annuity. But this is why your prospects are interested in an annuity and why you need the ability to illustrate to them how you can solve their problems as they age, and you need the training to know how to approach them and what questions to ask them. You need to know exactly all the details about Roth IRAs and Social Security, and that's all the stuff we're going to show you how to do. So the reason seniors like annuities, or anybody likes annuities, is because they can get partial withdrawals for any reason, typically after the first policy year, for the cash they need to travel, to visit family, for sudden emergencies. In other words, just to live a good life. And the reason they can do that, the reason annuities are so valuable compared to stocks and bonds and other things, which we'll talk about, is because of the IRS code section 72. And that code says that income credited on a deferred annuity is not currently includable as income. So that means think about it. Someone tells you, oh, I get a 10, 15% return in the marketplace, you know, when I have money in the stock market. What they're telling you is they get a 1099 from their broker. They have to report that income to the IRS. And the question I always ask them is, on that gain that you got, do you need that money to live on? And 80% of the time they tell you no. So they're paying taxes on money that they didn't even take. But yet if they got a gain inside an annuity, they don't have to report that money to the IRS, because what did the Section 72 say? It allows that income credit on a deferred annuity is not currently includable as income. So what does that mean? That means their interest grows tax deferred, giving them the value of triple compounding: interest on principal, interest on interest, and interest on tax savings. That's the money they would have paid in taxes. But here's the problem. Here's the problem I had as an agent for years. And I did about $1 million a month in annuities. But here's the problem. How do you illustrate this to people? It's one thing to just tell them about it, but how do you illustrate it? Well, the example we're going to use today is talking about Social Security. So I want to point out to you that the Government Accountability Office found that 42% of people are unaware that their Social Security benefits can be taxed. So the tax law was changed. Originally, Social Security came in 1934, and it wasn't taxed. That was Roosevelt's tax on Social Security. In 1983, the law was changed so that Social Security could be taxed up to 50%. And then in 1993, law was changed again. Ronald Reagan changed it so that it could be taxed up to 85%. So, well, what taxes it? What causes it to be taxed? Well, it's called provisional income. Here's how provisional income works. So if you're a single person and you have 25,000 or under, there's no tax on your Social Security. How many people you know live on 25,000 or under? But if you have 25,000 to 34,000, up to 50% of your income can be taxed. And if you make over 34,000 and you're single, up to 85% of your income can be taxed, your Social Security income. It's even worse for married couples. So if you're a married couple and you have over $44,000 in income, and I'll show you what all that income is, up to 85% of your Social Security can be taxed. And more than half of people's income is Social Security. Imagine 85% of that having to get taxed. Wow. So what is provisional income? It's any 1099 income from savings or investments. That's called provisional income. It's added to the Social Security. And if that takes them over the threshold, $44,000 for a couple, $34,000 for a single, then the government comes back and looks at those Social Security and taxes it either 50% or 85%. So what is the provisional income? Well, it's from IRA distributions, certificate of deposits, money market, U.S. Treasury, mortgage certificates, tax-free bonds, capital gains, corporate bonds, half Social Security. That's the threshold income. That's what makes up the provisional income. This is why it's so financially devastating for your clients. And a lot of the times they don't even realize why it happened. I don't know why their tax person didn't tell them. But here's how I used to illustrate it. Now, I'm not going to go through all the details in this. This isn't a Social Security training. You get Social Security training in our course I'll show you later. But this is the kind of chart I had to show them. Now, here's the problem. When I got down to step 3, people's eyes would glaze over, either the husband and wife. I mean, I would lose people at step 3 or 4. Now, they would nod their head. Oh, yeah, okay, oh, yeah. And what they're thinking in their mind is, yeah, I'm going to have to think about this. But that's the way I've had to do it for years. Now, and I did pretty good with it. I learned to slow down, make eye contact, ask tie-down questions, close-in questions, open-ended questions. But it was very hard to close people because it's a lot of information for them to absorb. So I've got some really good managers that taught me the questions. You probably heard these questions, right? So I went to a course one time on asking questions, and here's the 2 questions. One of the managers sent me to this course. Is the interest on your certificates of deposits, money market accounts, or other plans affecting the taxation of your Social Security benefits? Are you paying income taxes on interest or money earned but do not currently need? So then I could show them how to reduce their taxes. But here's the way I showed them. I'm just going to go through this real quick. Here's the way I would show them. So this is my client. Sam's retired, lives comfortably. This is a single guy, receives a pension and Social Security. He's got savings in a CD, mortgage certificate, money market account. He didn't need the interest, so he reinvests the interest back in his certificates, which means he gets 1099, has to pay tax on it, but he didn't actually get the money, remember? So here's the way it's spelled out for him. He had a total federal income tax of $5,827. This is using an estimated tax base of 12%. So it could vary, but so that's what it was. So I'd write that down on a legal pad. Always think in ink. Write it down on a legal pad for him. And then here's how it broke down. Because he went over the threshold, we would take half the Social Security, and that's where the tax came from. So he would be over the threshold, $16,700. That triggered the tax on his Social Security. See that? And that is how I brought those great little arrows up. That's how I would engage people. That's the only way I could engage them, do those fancy little PowerPoints. So here's what he had. The tax on his Social Security was $1,163. Can you imagine that? Your income is reduced $100 a month just because you're trying to get a gain on your money to protect your future retirement. But this is the only way I could illustrate it. Then I'd use fancy charts. At first, I would have flip charts, and I would just flip it over, you know, show them, flip it over to them. And then I got a little laptop and learned how to do PowerPoint. Then I'd show them this way. This is the only way I could show them how to do it. Again, this isn't a Social Security training. I'm just showing you this is the only way I could illustrate the problem with them. So here it is. I had it in red, right? Net retirement income after tax. With an annuity, $28,000. Without annuity, $24,000. I would tell them I can increase your income 13% by simply repositioning this money that has a return that you don't need to live on anyway. But I would always get, I want to think about it, because this was just really hard to illustrate this way. It wasn't engaging. Then I started using charts and graphs, getting really fancy. They thought I was really knowledgeable. So there has to be a better way. And, you know, I've hooked up with Tim, man, and by gosh, there is a better way. Yep.
Okay, here we go. So this is the program that we have. It's called Retirement View. It's a very colorful program, and agents and advisors use it to build a person's retirement picture and show them visually if they're going to run out of money. And what's beautiful about that is that a picture is worth 1,000 words. You can convey so much more in a short amount of time, and it's going to be very personalized to them. So instead of a bunch of boring slides, sorry about that, Lloyd, you can show them something that's very impactful, gets them leaning forward, and you're not going to have their eyes glazed over. So let's just talk about at a very high level. Here, this is the retirement graph, all these colors you see here. And when I roll my mouse over, you see this blue line move around. So each bar is 1 year of retirement. I can go over here to the first year of retirement in this little sample case. I can even click there and hold it. Then I can go up here at the top, goal plus expenses. In this little case here, I just have a sample of. Then I'm going to show you Sam Q Prospect that we just went through. 111,000 for their goal or expenses. They're getting money from principal. I guess I don't have a return, so there's no growth. Let me add a return down here. Get some green in there. Okay, there's a little bit of green now. So you see some of that, 18,000 from growth. We don't have any other income. We have money from a pension. We have money from Social Security after taxes. So the blue, when you look at these colors, at the very bottom, the blue and the yellow are their pension and Social Security. So that's their guaranteed funds, and the rest is coming from their investments. And the height of the bar is showing how much they need. So we're trying to hit that as a target. So like in this program, if they say they need, you know, X dollars, then we're saying, okay, after Social Security and pension and we hit your investments, this is how long your money is going to last. So that's at a very high level. But you can build these things so easily. Anybody can do it. You don't have to be any type of planning expert. Now let's talk about these buttons down the right. You've got a savings graph. That's showing their total investments as it grows up to retirement and then gets spent down during retirement. If we had other investment types, you'd see them on here. Let's say they had some tax-free Roth money maybe. So you'd see that over there. The second button, the retirement graph, that's the main view. You can call it the retirement picture. You can call it a retirement checkup. You can call it whatever you want. If you're meeting with someone, you say, hey, I got this tool and let's get together. It only takes 15 minutes. We'll run some numbers and build your retirement picture and see what, if anything, you need help with. Okay, the third button is the spreadsheet. And I don't recommend jumping into this with clients. It's pretty big, but there's a lot of info in here if you want to look at it. Here, the orange columns are the required minimum distributions. You got all the different things like cash infusions, special expenses. You got their goal. That's the aqua blue. That's the target you're trying to hit. We're going to go way, way over here to the Social Security. And this is the pre-retirement period. But if we go down to the retirement period, we should see some taxes. Okay, yeah, estimated tax. And, you know, you can zoom in on into this with clients. I'd stick with the picture. You'd only go in here if there's technical questions or whatnot. I'd stick with the graph. Real quick, these other three buttons are where the program goes from being a simplistic program to a very comprehensive program. And I'm going to show you how to build a case so quickly, but in general, you can just go down to the bottom and enter data. So I move my mouse all the way down to the tax-deferred investments. I can just enter that here, or I can click on the investments button on the right, go in here and enter everything they have. So I could go in here and say, oh, how much do you have in your 401k? And he says 250,000. And do you have an IRA? Yeah. How much do you have in there? Okay, I got 100,000. And I would put in the returns that they're getting, ask them what kind of return they think they're getting. A lot of times it's good to find that out from them. So let's set that to tax deferred and add that into the plan. So that'll update these numbers. So you see now this says it's got 350 because I put that in on investments. And then real quick, cash infusions is other money in. So things like selling a home, inheritance, part-time job. This is where we're going to model annuities. We're going to, in just a second, model the interest on the CDs and money markets here. And special expenses, like we can put in a retirement goal of, say, 75,000, but you can go in here and layer on other items that are either lump sums or series of payments. And that way, anything that they throw at you, you can just go in here and enter. Okay, so just to speed things along, let's go ahead and create a new client file. Another thing is this is a desktop program, so you don't have to worry about someone hacking into a cloud system and stealing your client's information. So I'm going to go in here, SamQ Prospect. All of you just need the names and the birth dates. That's pretty much all you need. Let's make them a little bit younger. Let's say it's like, well, 1950, that's fine. Let's say they're, well, maybe a little younger. Let's try 1955. Okay, so now we have SamQ Prospect. Now, it looks like I was kind of messing around before this, and I had set a bunch of defaults. So I'm going to change these defaults a little bit to just focus on the information that we had in the original example, because I want to show you what we did with Lloyd on his slide. So I'm going to get rid of some of this stuff here. I'd accidentally saved that. So here we have a blank plan. There's no investments, no nothing in there. The guy's 63. Let's say he's going to retire at 67. Now let's just leave it at 68. Just keep it simple. Okay, so let's talk about what we entered from Lloyd's SamQ Prospect. He's got Social Security. Lloyd said he had 11,400. So all I do is move my mouse down here to Social Security annual amount on my keyboard, 11400, and I hit enter. So now we have Social Security. There's a built-in cost of living adjustment. He's going to get it starting at 68. And then I'm going to move my mouse over here to pension or defined benefit under annual amount. I click in there and I'm going to enter the number 19,200. Again, this is from Lloyd's example. And then we're going to start that at 68. So we go up here with the mouse, roll that over the retirement graph. Now we can see their pension and Social Security after taxes. All right, so if you want to see the exact taxes, you can see that it's getting netted out there. Or you can go to the spreadsheet and go all the way over to the end and see the taxes being netted out over there. But we haven't entered everything yet. So let's go to cash infusions. Now we could model the CDs and money markets as just the taxable investments. And if you're working with a client, you may want to do that. But for this workshop, I want to model the income as,
So Tim,
yeah,
can I ask you a question?
yeah, go ahead,
So
man.
any of those headings there, like inheritance, part-time job,
Yeah.
those aren't static, right? You can click it and then change it to whatever you want it to say.
Oh, yeah, exactly. So those are just examples or samples, if you will, so that when you open the screen, you won't. Yeah.
You can customize it to each prospect, right?
Oh, yeah, exactly. Watch me. I'm going to change it to money market income, you know, and then we can customize it. So like these are just examples, like part-time job, life insurance, annuity payments. Maybe they have rental properties, sale of business, anything that's a lump sum that they get in, or a series of payments. So in this case, just to match your slide, the CD income was 12,400. And let's just start that when he retires, and let's make it a lifetime income. And then I'm going to click all the way to the end. Let's leave that as taxable so that it does affect the Social Security. And we'll match the tax rate that we had in there, 12%. Then we go to the money market income. You said that was 4,400. Okay. We're not going to grow the income. We'll just say that they get the same interest rate, just to make things simple, because we kind of want to match the slide. So then we put in the 12%. It's taxable. We add this into the plan. Okay, we're back to our retirement picture, but now we see this white. Again, we didn't enter, you know, a bunch of IRAs and 401ks. We're trying to keep it really simple, really simple. So they still have red, whatever target we entered. I entered 50,000 over here and a 3% inflation. They're still not meeting their target.
So Tim, let me ask.
Yeah, go ahead.
So in this one here, you're not trying to eliminate the red. You're just illustrating how you can put the numbers in and then show them in real time the changes on it.
Yeah, exactly. That would be more advanced,
All
talk
right.
about how to get the red out. And that's a great way to work with the prospects to close them, basically. But in this case, I'm just trying to show them the Social Security example. So the white other income after taxes, if I go to the first line and I go up here to this box, other income, you see 14,784. So that's after the taxes on it. You see the pension after taxes and the Social Security after taxes. And if we go to the spreadsheet and we go all the way over again to the Social Security columns, you'll see that we're, you know, the tax on Social Security, the ages are a little different than maybe the slide and whatnot, but you see that the taxes are very close in the Social Security after taxes. And so you can look at that. Now watch this. Now we're going to go with how to eliminate and reduce the taxes. So right now, I'm going to go all the way over here and click on cash infusions. The CD income and the money market income is contributing to the tax problem on the Social Security. But if we enter an annuity, so I'm going to remove the CD income and money market, and instead I'm going to go to the third line and say annuity income. So we're going to just reposition. That's it. Like all I did is show the client how to reposition their income. Let's say there's no COLA rider, and again, it's for the rest of their life. And in this case, there's no taxes, but more importantly, it's categorized in the tax-free area. So this 16,800 is no longer going to contribute to the taxes on the Social Security. All right. Now we're still going to have income from there. If I go to the spreadsheet, though, you see we eliminated the tax on Social Security. Right there at age 68, you see the tax is 0. The reason why you see $2 at 69 and 14 at 70 is because there's a little COLA built into the program that's the 20-year average of Social Security. So as that COLA bips up, the Social Security is going up slightly. But still, we eliminated the tax on it, and we also reduced their total taxes. So there's another column on the total taxes. But you can illustrate that. And this is just an example that we honed in on for the workshop today. You can do Roth conversions. We can put in all their IRAs and 401ks, their taxable investments and savings. There's ways to model expenses that are more complicated than we're doing here. there's ways to show clients, hey, if you did this, you can make your money last longer.
Let me show you a couple real quick. So Gary and Lisa retired and traveled quite a bit. Gary and Lisa received a pension and a distribution from an IRA. Now they also receive a 1099 income and their Social Security. Like most couples, they don't need the 1099 income, so they reinvest the interest. So here's how I would illustrate it in the past. Whether I did it on a flip chart or later down the road, I would use a PowerPoint like I'm using now. This is how I would illustrate it to them. So there's their total income, and I'd have to do it in red to show them that their tax on Social Security is $1,500 a month. I don't have the fancy graphs like Tim showed you. There you go, $5,334 tax on remaining income. That's the way I'd show it to them. But, you know, I don't want you to think that I couldn't get fancy like Tim has. So I'd have my little graph like this, but then I would start adding stuff to it. Notice how I did the bottom little thing? Watch this. See how fancy that was? And then go, ooh, can I buy from you today? Just kidding, not really. Then I'd put graphs together like this. I'd throw up little bottom things like that. Total tax potential, $3,891 versus $6,864. Woo! Get them all excited about it. And just to make sure, then I'd get a real fancy chart on them. Throw my arrow up there. And they go, what's that? $1,530. Then I do my other little chart, potential tax saving $2,973. And bam! I'd swing that on them. And then that, by repositioning Gary and Lisa's 1099 assets, that created the taxable income into a deferred annuity. The tax on the $20,000 interest and the $1,530 tax on their Social Security were both eliminated. And that became an annual premium on a long-term care policy. Then I'd get really fancy. I'd put bubbles up here like that. Woo! So here's your income before and after. So without a deferred annuity, $34,000 in income. With a deferred annuity, $38,000 income. How great is that? So not only did I increase their income, I freed up money to pay for a long-term care policy, which they're going to need. So Tim, can you beat that, my friend?
Yes, I think I can. Okay.
You think you can, huh? All right.
I think I can.
Well, let me give it back to you again. See if I can give it back to you without messing it up.
Okay. I'm hitting share, and then I'm sharing my screen. Okay. Now let me bring up the software.
We did it right this time. Whoa!
Yeah. A virtual clap or an actual clap if anyone wants to do that. All right. I'm going to close this other SAMQ prospect that we did, and I'm going to create a new one. Again, I've got to get rid of these other. So we're doing these other inputs, Gary and Lisa. And while I'm doing this, remember, it only took me a couple minutes to do this before. So notate on your clock what time we're doing this. So I'm just going to do Gary and Lisa sample. And I'm going to go up here, Gary and Lisa. So I'm creating a file. It's going to reside on my hard drive. All this stuff is optional except the names and birth dates. So let's do 1955 again. I'm just going to put in some birth dates. Let's say Lisa's 1955, Gary's something or another. So you got their birth dates, hit save. So now I got a file. And again, as I mentioned before, I'd accidentally saved these numbers. I'm going to just get rid of them real quick so we can start fresh. And now, okay, so we're back to our graph. I've moved my mouse around. You see all this red, you know, Gary and Lisa, we haven't entered anything. So now I'm going to try and enter the case that Lloyd just showed. So again, notate your watch or whatever. Now, one thing to note is when you do a couples plan, we've got Gary in this tab. See where it says Gary right there under the Circle 1 tab? We got a Circle 2 tab for Lisa. So we got the exact same inputs for Lisa on here. And then we have other assumptions, 3. That's where we can put the retirement income goal and taxes. So I'm going to go over to Gary's tab, and I'm mainly just going to enter the pension and Social Security first. So I move my mouse all the way over to where it says Social Security benefit annual amount. So the annual amount from Lloyd's slide, $24,450. I just click in there. I type those numbers on my keyboard and I hit enter or tab. And then voila, we see it show up on here. Let's see, Lisa, let's make her retire at 68 so we get rid of those other couple of years in the front. All right, I'm back on Gary's tab. Here's where we entered the Social Security. Where do we enter the pension? We go right next to it. See pension or defined benefit. I'm going to go move my mouse over here. Annual amount. See, I just click in there. And then I put in 24. Okay, I put in the wrong numbers because I was looking in the wrong place. So the pension is $24,450. The Social Security is the $15,000. Yeah, sorry about that. Let's put that in as a.
But you know, Tim, what I love about this is over here on the personal information. That means every year I can go out and do an annual review with them.
Oh yeah.
And change the numbers the whole time.
Yeah.
So they can correct a mistake early enough that it doesn't impact their later retirement.
Oh yeah. I mean, you see there, I made a simple mistake. I just put the pension and the Social Security, and I corrected it in about 5 seconds. So that's the nice thing about it.
Guys, notice Tim corrected that mistake quicker than I corrected my mistake.
And like, you know, I get calls all the time from guys that are, hey, Tim, I'm using software program XYZ, and you can name the programs. And they're like, I spent 2 hours on it. I printed out a 100-page report. I went out and visited them, and I made a mistake on the pension, or I left it out. And I got to reschedule another meeting because I can't change it right there on the fly. And I got to go print another report, and it's back in the office. So, you know, don't get caught in that trap when you can use a tool like this, which lets you just make changes immediately and quickly and instantly right in front of the prospect. They see it. This is their picture. They see it. They own it. So when you build this with them, they're leaning forward. They're leaning forward. They're like, okay, Lloyd, how do we do this? How do we do that? They're asking you questions. They're wanting you to show them how to fix these problems and get the red out. It's so interactive. Okay, so let's go click our mouse. We go all the way to the right to our cash infusions button again. And I'm going to put in the 1099 income. I'm going to go to the line 1. I'm going to call it 1099 income. So they're getting interest off something. And based on Lloyd's slide, that was 20K. All right, so we got 20K of 1099 income. Let's just say it remains flat. We'll start it at 68 for life. Let's just say they don't dip into their principal on that one. And let's say we still have the 12% tax rate, and we leave it at taxable. It's 1099. They got to pay taxes on that. It's hitting their Social Security. Okay, so we'll get back to a similar picture as the single person with Gary and Lisa, but we have more income now. And we got the after-tax Social Security, that's the royal blue. We got the after-tax pension, that's the yellow. We got the after-tax 1099 income, that's the white. Now they still have a gap. So again, we're not solving for that gap right here on this webinar because it wouldn't take too long, but we just want to focus, as Lloyd says. Okay, so I'm going to go to the spreadsheet, and I really wouldn't normally spend a lot of time on the spreadsheet with a prospect, but if you're focusing on the taxation of Social Security, then you might want to go in there and focus in on the taxes and how it reduces the taxes or the total taxes. The very last column shows the total taxes. And then what you can do is you can go to the cash infusions, and then now we're going to move it to an annuity. So I get rid of the 1099 income. Let's call it annuity income now. So you've repositioned it. So the idea is to show like before and after. I've repositioned it. And let's say duration 40. And let's say that it's, I'm sorry, tax-free. Add that into the plan. So we still have this income from the principal, but now it's coming in and not affecting the Social Security. So again, you would go to, if you really wanted to focus in on that, you could go show them right here. I show how the total taxes dropped. So you don't have the taxes on the 1099 income, and we also reduced the taxes on the Social Security. You could go to the Social Security and show here, like we eliminated the tax on the Social Security there. and so forth. So you can focus in on that. So this is just one example. What do you think of that, Lloyd?
So let's find out what everybody thinks on the call. Which way do you think is better? My way, the way I've done it for years, or the way that Tim has shown me how to do it? Just type in the text box, the chat box, and let me know which way you think. So one of the reasons why I hooked up with you, Tim, is because I think that if I had a way of getting my clients to put their hands on it and take ownership over it, that they'd probably buy it. I mean, it's like test driving a car, right? The reason you test drive a car is so you can take emotional ownership over it. So, you know, I hate to admit it, but yeah, I like your way of doing it. So that was my plan. That was my plan when I met Tim, is I need to have this in my bullets for my gun to make more money. So here's my question for everybody on the call today. What's your plan? What's your plan for the coming year? Because if you make the same choices, if you run your business the same way in the next year that you ran in the last year, are you going to like the results you have? Because one of the things, I showed you 2 questions I learned. You probably learned the exact same questions. But here's the questions that I developed that allowed me to take a distribution from writing $25 million a year in business to $55 million a year in business. Here's the questions that I use that allow me to go from writing $500,000 in annuities a year to $1 million a month. And these are the questions that you will get as a part of the program that I'm going to show you today. So these are the questions I ask. I have to know if people are paying taxes on their Social Security. If people are paying taxes on their Social Security, that tells me they've got a lump sum of money out there that's causing them to go over the threshold, and that's why they're paying it. So, you know, there's high trust questions and low trust questions. I like to ask low trust questions to give people the feeling that they can trust me, so that they disclose more high trust answers to me. So Mary, let me ask you a question. Did you have to pay tax on your Social Security last year? Well, yeah, Lloyd, I think we did. Let me ask you this. Did you have to pay federal taxes on your Social Security? If they tell me they had to pay federal taxes on their Social Security, then that tells me they've got that lump sum of money out there somewhere. So what percent of your Social Security was taxed? Now, if they don't know, that's the great time for us to have a look at their tax statement from last year. And then my next question to them is, the interest that caused you to go over the Social Security threshold resulting in this tax something you need to live on? So did you pay tax on your Social Security last year? Do you have to pay federal taxes on it? What percent of your Social Security was taxed? Is that money that created that tax, do you need that money to live on? Well, let me ask you this, Mary. When they say yes, let me ask you this. What benefits do you see in comparing rates of interest on income without receiving a 1099 that's reportable to the IRS? If they, and here's the thing, what I like about this question is it's not a yes or no, it's not a closed-in question. It's a question that uncovers information. So when they say, well, yeah, if I didn't have to pay as much taxes, I could do this or that with the money, would not having to report that interest on your 1040, would that have helped you reduce or eliminate the taxes you paid on your Social Security? When they say yes, because 80% of them always say yes, the next thing I say is, let me show you how this works. And that's when you can have them enter that information in the software. They'll see the numbers themselves. It'll become their numbers, not your numbers. And when they do the illustration like Tim just did it, and they see that change, I can say, Mary, let me ask you this question. Of the money you have left, see, I don't argue. I don't get in a battle about whether they should use a stockbroker or not a stockbroker, whether annuity is better or worse. I don't get in an argument with that kind of stuff. I just ask the question, of the money you have left, how much do you not want to risk in the market so that you can feel more comfortable trying to get an upside gain on the rest of your money? See, all I want to do is take whatever number they name, 25,000, 50, 100,000, whatever number they name, I'm going to take that, reposition it in annuity, and that's where you pick up this lost income that you had in 2018. So whether it was 5 sales, you know, how many sales, how many people did you have? Somebody put in there 10 people. 10 people, if you have an average commission of 5,000, 10 people you didn't make money on, that's $50,000 you left laying on the table. You can avoid that in 2019. In fact, in 2019, if we go back to the same 10 people, and only 50% of them you made money on, and you only picked up 50% of those as sales, that one person that put that 10 number in there, you would have picked up an extra 25 grand in income. And more if your commission was more. So, agents say this to me all the time. Well, how do I know that's true? How do I know I can make that money? I heard you don't make much money on annuities. Well, I'm going to show you how to get rid of this in 2019. Bankers Life pays anywhere from 2 to 3% commission on annuity. I know some of you life people, hey, I'm getting 100% commission on my life insurance, Lloyd. Okay, 2 to 3%. That's what Bankers Life pays. Allianz Life pays 6%, 4%, 3%. In fact, American Equity has an annuity out there that you get 6% on. So how do you really make money with that? Well, here's how you do it. If you only got a 2% commission and you wrote a $100,000 premium annuity, you made $2 grand. If you wrote a annuity for 100 grand that you made 3% on, you would have made $3,000. Like, I don't know, Tim, do you know what the national average is on that?
Yeah, I contacted LIMRA, L-I-M-R-A, and they're, the industry group, and they sent me the latest stats from 2016. I don't know why they don't have more recent ones, but did you know this? The average indexed annuity size for 2016 of all indexed annuities was 105,400. Lloyd, you there, Lloyd?
I got you. Go ahead.
Okay, yeah. So I don't know. I found it interesting that the average age was 61.8. That means some people are buying annuities in their 50s, and some people are buying it in the 60s and 70s. So whoever's on here on this call, if you had some kind of preconceived notion that you only work with seniors, or you don't work with seniors, or you work with only baby boomers, whatever that notion is, like, people buying annuities are anywhere in their 50s, 60s, 70s, even 80s. Like, there's all kinds of people that buy it, and the average is 105,400 for an indexed annuity. So your commission at 5% on that is definitely well over $6,000. Also, Kathy says, this is interesting. Kathy throws in there, I just like to throw this out there. Her average premium is $200K at an average commission of 5%. And it's anywhere from age 50 to 72. So there's a person on this call telling us what they're doing.
Yeah, so, any people who tell you can't make any money in annuities, that's just not true, buddy. That's just not true, friends. It's not true at all. So you can make an extra $125,000 in 2019 by simply learning to ask the questions that we're going to show you today, having a tool that allows your prospects to enter their own information. So let me ask you this. If all this makes sense to you, we'd love to continue working together with you. If that's okay, if I can show you how we can continue working together, just type in the chat box yes or no. Let me know if it's worth your time to do that, if I can show that to you. Just type in the box there and let me know, because what I'd love to show you is a way that you can get our questions, the way you can get Social Security training, annuity training, Roth IRA training, the software program, get everything that we have in there. I just want to be able to show that to you. All right.
Yes.
Well, I just didn't want to take time if you weren't interested. So
lots of yeses.
Let me show you how that works.
Ed,
yeah.
Robert, all these people are saying yes, Lloyd.
So we have a program called the Retirement Pro Online Bundle. Today what we talk to you about is how to sell the problem and tell the solution. I know we should say sell the problem and show the solution, but I don't want to show people stuff. If I show them stuff, then they're asking to think about it. I want to tell them what the solution is. And the reason I'm telling them what the solution is, they've already asked me, how do I get this? How do I solve this problem? And the reason they ask, how do I solve this problem? How do I get this? Is their hands are on the tool that's showing them the problem that they're selling themselves. They're selling themselves on the problem they want to solve. Listen, Mike Zena is a customer of mine. He's a client of mine. He said, Lloyd knows his business. He's a consummate professional, diligent in his practice. and has a flair for making it fun. I've learned how to better attract a tribe, engage them, and keep them coming back for more. If you want more engagement from your prospects, talk to Lloyd. So the program Selling Annuities has 23 lessons in it. The lessons are everything from major retirement concerns, the 8 rules for annuities, misconceptions about annuities, annuity basics, features of fixed annuities, annuity terms, the split annuity concept, split annuity income riders, stretch option IRAs, sales ideas for fixed annuities, the annuity workbook. There's a whole bunch of stuff in here, 23 different lessons in here for you. I give you a welcome video, which I tell you exactly how to walk through the course, get some information on myself. The workbooks are in here. So I worked with a guy that was on the training a little while back. He reached out to me and he said, Lord, I have an opportunity for annuity. My experience is limited. I have only closed one so far. We're looking at $102,000 she has, a thrift savings account through the post office for $232,000, which she really doesn't want to touch. So he asked me to call him. I reached out to him. I told him to send me her thrift savings. Let me have a look at it. He sent them to me, and I gave him some input. He met with her again, decided on a 5-year and 7-year options fixed. He wanted to write her right then. So once he went through the training, he was able to jump right on it. And then he wrote a $102,000 annuity. Tim, what did you say the average is?
Yeah, the national average was 105,400. So that's like really close to that.
Listen, we want everybody on this call to be above average. But if you were just average and wrote a $100,000 annuity and had a 3% commission, would a $3,000 commission make a difference in your income this month? Was there any month this year that it wouldn't have made a difference for you?
What if they got a 5%?
So you get videos. Go ahead, man.
Yeah, what if they got a 5% commission? I mean, I hear that a lot of people getting 5%, 6% commissions. So
yeah, Bankers Life has a 6% commission. 6% of $100,000 is
6,000.
How much is that?
$6,000.
$6,000.
Ka-ching.
That may be a couple of months payment. So you get the videos, the downloadable content. You get a video that tells you exactly how to use the program, and you get the Retirement View Pro software. It's your personal closing companion. So you get the Selling Annuities, 23 videos, and you get 8 weeks of training. So every week you get a video that shows you exactly the demo, how to do the basics, how to set up the retirement expenses, how to do everything Tim just showed you how to do. Every week you get this video that shows you exactly how to do it. Tim, tell us about Jim.
Yeah, Jim, we were on the phone. He's telling me about his success. I got him to kind of email me his thoughts. And he says, I used the Retirement View software and got my first ever check with 2 commas and 7 figures. I recommend the Retirement View software to everyone. So that was probably a rollover that he was doing. But still, we get a lot of feedback from advisors and agents closing annuities, bringing on AUM, doing IUL, just about any financial product, really.
So you get the 23 lessons on selling annuities. You get the weekly product training. Listen, with this program, you're going to get rid of being an unpaid consultant. That's when they tell you, I want to think about it. You're going to be you're going to quit being a professional visitor. That's where they tell you, can you come back? Can you come back next week? Can you come back next week? And you never get a hold of them. You're going to get rid of call reluctance. You're not going to be reluctant to call anybody anymore because you know that you have the tool to show them the problem that they want to solve. You'll get over objections over price because they will want to solve the problem that they themselves put their own hands on. And you'll get rid of clients who say they don't know anyone to refer you to because they're going to want to tell everybody about this solution. And you will quit struggling with doing the needs assessment with people because when they put their hands on your laptop and enter their own information, they are addressing their own needs. And you won't have to struggle with prospects taking action. They will reach for the solution themselves. And you won't have to worry about what to say to close because you'll have the script exactly word for word of what you need to do. Listen, you guys can nail this. You can have consistent income that you deserve, have a steady work stream without overworking. You'll hit your goal every month, have certainty of your workload, access to the coaching you need to get past any of the barriers. So let's talk pricing. I do trainings for a lot of different organizations. So I recently did a training at the Lead Generation Summit. Now, the summit cost $1,297. If you just came to my 1 hour training, the summit charged, not me, the summit charged $197. So Glenn was at the summit. He said, he emailed me after the summit, like a lot of people do. He said, thanks for the quick reply. Very impressed with your session in the Lead Summit. I just ordered your book, Leads to Results. I am a trainer, a corporate trainer and a coach with Lorman Education Centers. I do a lot of training for them. The training I did with them recently is learn effective and professional skills to achieve sales goals and boost revenue. Now, Lorman charges $99. So if you took this online webinar with Lorman, they would charge you $99 for my course. Or if you went to the Association of Business Training, they charge $99 for the perfecting your inside sales methodology. So the reason I did this, the reason I want to show you this is so that, how do I know what the price is set? Well, I know what organizations are charging out there in the marketplace. It has to be a price that's fair to you guys, and it has to be a price that's fair to us. I want to make it affordable for everybody. So you get the annuity course, 23 lessons, the $2,277 value. You get the Retirement View Pro original. The original price of that $799. So if you went online right now, you pay $799 for it. That's a $3,076 value if you just got those two things. So let me ask you this. Type in the box what your answer is here. If you could get this kind of help to stabilize your business, build a reliable income, and increase your sales consistently for the rest of your career, would that investment have been worth your time and your money? And think of it today. You've been on the call for an hour today and haven't paid a dime for this. But would that investment have been worth your money? If you could get everything we've talked about so far, just type in the chat box and let me know if you think that would have been worth your money. So all those lessons include the scripts, the PowerPoints, the workbooks, the training on how to use the software program. So yeah, everybody thinks that's more than worth the money. Let me tell you this. Joyce was a manager that worked for me for years over at American Republic. He said, Lloyd and I worked together at American Enterprise, and I cannot sing his praises loud enough. When I originally met Lloyd, I was green in the art of selling products, and through his help and insight, I became a sales manager in just over a year. Lloyd's direct approach to training and sales is excellent, and I feel he is and will be successful in all that he does. Tim, tell me, what's this IUL from Bob?
Yeah, if you look up there, this is an email I got from Robert Martinelli, and he's been using the program for a couple of years. Look at the subject line. It's highlighted in yellow. Tim, I just closed a life case with, and then the body of it says, $250K a year premium, 90K target. Your software helped me close the sale. The commission is in the 70 to 80K range. Thank you. And if you look at the date at the top, that's from back in 2017. But I talked to Robert about every 6 months or so. He's still killing it. He still uses our software to illustrate people's retirement and get them moving towards becoming a client. And he's just killing it.
If you guys want to be like Robert, you need to think about the 23 lessons you can get for $2,277. Think about the Retirement View software program that we illustrated today, total value of $3,000. But we said we want to make it affordable for everybody. So we decided to just price it at $998. You get everything today. Hey, but wait a minute. It's going to get better. We've got a special bonus for those of you who decide to jump in today. And that is our fast track coaching program. We have 55 one-minute coaching videos for you on every kind of topic you need to run your business. And these are coaching programs that you can download right to your iPhone, have out in the field with you and take anywhere. Rejection versus objections, what's needed for a business restructuring plan, everything you need on here to run your business. So you get the 23 lessons at $99 each. That's $2,277. You get the Retirement View software program at $799. The bonus fast track coaching, they're $10 each, $550, total value of $3,626. I said everything for $998 today. Listen, James says no matter how seasoned we are, we're always investing in ourselves and advancing. You're a terrific partner and resource, and this is a no-brainer. Thank you for all that you do, Lloyd. Listen, you have two choices. Your first option is do nothing and not take this leap of faith, which is 100% risk-free. And your second option is pony up the small amount of money compared to all the value you get. I mean, you spend more money than this on a direct mail program. But Tim, I've got another bonus for you.
Okay.
You get our on-demand webinar classes. So this is the 4 things seniors, our clients are concerned about. This is the Medicare supplement script you need to use to convert prospects into your Medicare supplement clients. How to sell annuities using Social Security strategies. The 7 phrases that inspire confidence, and how to find the right long-term care prospect. So you get these 4 lessons included. So the annuity course with 23 lessons, the Retirement View software program, the bonus fast track coaching. You get access to the on-demand webinar classes, all that for $998 to jump on it today. But wait a minute, got one last surprise for you. You take action right now and lock in the special pricing. Use the discount code TAKEOFF399. You're only going to pay $599 today. That's only $599. That is the cost of one direct mail program that you spent money on this year and didn't make your money back, right? You did a 1,500 mail drop for $500. You probably got 2 appointments, and you maybe didn't even close one of them. You will more than double your money on just the one sale. If you only got a $100,000 sale, you're going to triple that amount in your first commission. And you got a 30-day money-back guarantee. There's no reason you shouldn't change next year. You get selling annuities, 23 lessons, fast track coaching, 55 coaching videos, weekly product training, 8 lessons, specifically on how to set up your software. You get the on-demand webinar classes. So when you go to the link that's right there on your page, this is what the order page is going to look like. Make sure you enter your discount code. So you just go to powerbehindthesales.com/P/the retirement pro, or click the link that Julia put in the chat box there. Skipper said, working with Lloyd was extremely instrumental in my development in the health and life insurance business. If you ever get a moment to share time with him, you'll come away with so many essential nuggets within the industry. Don't forget your code, TAKEOFF399. And you can get your free download. It's going to be emailed to you right now. 7 ways annuities can solve your clients' financial problems. And Tim's bonus for you is his book, his ebook on how to gain instant trust with every prospect you meet.
Yep.
Tell us what Ian had to say, Tim.
Yeah, Ian says, you know, hey, I've used Retirement View for about 9 years. Before that, I used a competitor's product, which was way more expensive. With Retirement View, I spent a lot less time creating plans and entering data, and a lot more time discussing solutions with the client who was more engaged and interested than ever before. So you may get some kind of software from your IMO, or you may have something you're already using, but the fact is that it's not as engaging and as interesting as Retirement View. That's been proven. It's been proven by so many different people, and you're going to close more prospects if you use the Retirement View.
Yeah, you're going to join the ranks of thousands of financial advisors that use this program to help their clients. Listen, you got on the call today because you don't need more training, right? You need better training. Well, we've shown you a way to get better training. There's 37 problems you can help clients solve with this program. What are some of them, Tim?
Okay, before I dive into that, just a little administrative note. For those of you that are on here, if you click on the chat, the Zoom webinar chat, you can go in there, and that's where you can see the hyperlink directly to the the order page if you want to click on that. I've also put the promo code in there. So a few of you haven't clicked on the chat or looked at that, but if you click on that, you'll see very easily how you can click over. So the retirement view can solve so many different issues. We listed out a few here. So it's not just for Social Security, you know, it's for building a complete plan where they have a 401k plan. It doesn't matter if you don't know anything about retirement planning, you just fill in the blanks and you can build one picture for them. You're going to put all their income items and investments into the one picture. You're going to model how much money they need. And just those items alone are critical. People never see a picture of all their investments, pensions, Social Security, and whether it's going to, how much it's going to fund. So let's go to the next set. What if they have a Roth IRA? What if you're doing a Roth conversion? What if they have a pension, downsizing their home, rental properties? Maybe they have a 403B or a 457. Maybe they have an inheritance or they have life insurance. Keep going, Lloyd. So you can model all of these things, you know, it's more secure. Maybe they have unusual travel or medical expenses. Maybe you want to do a detailed budget. I didn't show it, but on special expenses, you can do a whole detailed budget for people. You want to show them annuity income, how that increases their guaranteed income. There's a way to model stock market drops to show how it just kills their plan. You're going to show them how long their money is going to last. And if it's not going to last and they're going to run out, they're going to be turning to you to save them and show them what to do. That's when you're really going to close them. Maybe they have a part-time job, reverse mortgage. It works for all kinds of products, not just annuities. It works for IUL, works for assets under management. Whatever you do, you can model it in there. Go ahead, Lloyd.
Yeah, Rachel said Lloyd's one of the most knowledgeable and effective sales training managers I've worked with. I always look forward to his training sessions because of his unique, no-nonsense teaching style and the vast amount of knowledge and sales skills he brought to the table. Lloyd's fresh ideas and perspective always made perfect sense, and his tips and techniques were easy to apply to my day-to-day conversation with prospective clients. So you get the annuity course with 23 lessons, the Retirement View software program worth $7.99, the fast track coaching worth $5.50, the bonus access to all the webinar classes, $396. Get all of it today for $5.99. Click the link in the chat box. You're also going to get an email with a link. You can just click on it and go right there and jump on board. Or you can click the link, or you can go to the website below, powerbehindthesales.com/P/the Retirement Pro. Remember, it's only $5.99. That's what the order page is going to look like when you go there. You enter the discount code, and that's what it's going to show you right there. So let me just ask a couple of questions here. What do you want? You've been on the webinar all this time. You signed up for the webinar for a reason. You want to become more confident, more productive, right? You want to get more sales, get greater wallet share out of every home. You want to reduce your wasted time, your wasted lead money. In fact, you need to just reposition your lead money into this program in order to save time and energy. Really what you want is you want to spend more time with your clients, right? Let me ask you this. If you had unlimited resources and could not fail, what would you do? What's the worst case scenario that could happen if you took this course? The worst case scenario. In fact, what are the implications if you don't do this? What did you mean when you signed up for the course? What did you mean when you said to yourself, this is interesting? What did you mean? What were you really looking for? What would be the most important thing for you to focus on in 2019? If you removed all your limitations that left all that money laying on the table for you this year, if you remove those limitations, what would you do? What would your year look like? What would be the best possible outcome in using this program? Getting one more sale, one more annuity, one more a month? What would be the best possible outcome? If the perfect opportunity had come along before you sat on this webinar, what would you have been prepared to do? If you were still in the situation that you're in right now, 3 years from now, what would that situation be like? And if you could do something to impact your situation. So you didn't wake up in the same place in 3 years. Would it be this year? Would it be jumping on this program today? Because you deserve it, your family deserve it, and your clients that you meet with deserve you being on here. And you have a 30-day money-back guarantee. There's no reason why you shouldn't take the money you're going to spend on leads anyway and reposition in this program. So let's look at again, you get the annuity course with 23 lessons for $2,277. You get the retirement view software programs for $799 and then some. You get the bonus fast track coaching, $550 value. And you get the quarterly live webinar classes for $396, $4,022 in values at a minimum. All you have to do is enter the take off $399 code, go to the chat box, click on the link, go to the website you see there. You'll get an email with a link in there to join the program. But you get one more thing that we haven't talked about. And I'm going to tell you what that one more thing is after we answer some questions. I got a chat from Julia that said we've got some questions. So Julia, go ahead and throw the questions up there. Tim, you can just jump on and answer whichever questions you want.
Okay.
Can this system help sell life insurance too, or only annuities?
Yeah.
Tim, you said you could do IULs and.
Yeah. You can use it to sell life insurance, IUL. You can show, there's also a life insurance needs tool if you want to show someone how much they need if their spouse passed away, but you can also model future life insurance that helps their retirement. You can also use it for IUL. So it's not just for annuities.
Well, let me address EPG sent a message through the chat. I want to address this with you. I understand the fear of never having done an annuity before, but you sold life insurance before, right? The annuity is based on the exact same principle. So let me, at the beginning of this webinar, and I'm addressing this to EPG, but this is for everybody. I said one of the reasons that I was able to become successful in the senior market is I recognized what was predictable about the senior market. So EPG, I'm looking at you. I'm telling you what's predictable. There's three things a man turning 65 or 66, depending on when he was born, is going to do as he ages into this next phase of his life. He's going to sign up for Social Security. When he signs up for Social Security, he's going to automatically be enrolled in Medicare. And then he's going to reposition the money he's spending on health care. Why is he going to do that? Because when he signs up for Social Security, he's automatically enrolled in Medicare. 80% of those people buy Medicare supplement, almost without exception. And we know where he's going to get the money to pay for that, because he's going to reposition that money he's been paying for his health insurance for the last 30 years. Even if him and his wife have group coverage, they're still paying for dependent coverage, aren't they? He's going to reposition that money to pay for his Medicare supplement, or his supplement, maybe a Med Advantage plan. That means his wife's going to need her own standalone health plan. And 3 years down the road, 2 or 3 years, if he's 65 and she's 62, she's going to age in. And when she signs up for Social Security, she's going to be automatically enrolled in Medicare, and she's going to reposition that money she had on her medical insurance into a supplement. Now, why is this important? Well, women live longer than men. And EPG, let me tell you what's going to happen. He's going to die before her, statistically. And when he dies, she's going to have a choice to make. She can take his Social Security and lose hers, because his is usually higher, or she can keep her Social Security and lose his. Now, his is higher than hers. What do you think she's going to do? This is the perfect time for you to do an analysis with them and reposition the money that's going to cause them these tax problems down the road. EPG, you don't have to be an annuity expert. You're a relationship expert. You can learn the basics of the annuity. I showed you the basics when we first started the webinar. In this program, you'll get the exact training you need for the Social Security sales, asking the questions, using the software. And I was going to say this till all the questions were done. I think Julie said we have 4 or 5 more questions, but I'm going to say this now. There's one other thing that everybody's going to get on here, including you, EPG, that's not listed. You're going to get Tim and I. And we're worth a heck of a lot more than that $4,000 or $599. We're worth a lot more than that. We answer our phones. You don't get an 800 number that tells you to push 1, push 2, push 3. You get me. you get Tim. You can leave a voicemail. We'll call you back within 24 hours. You can email me and I'll answer the emails. You are not alone. Sorry, guys, I had to stop with that because that really touched me because I felt the exact same way. Guys, do I spend this money on a direct mail program or do I spend this money on a system to actually up my game? So let me go to the next. Julie, throw the next question up there because that really got to me. Is there a debt elimination strategy? Well, I'm going to jump on that. If I reduce the taxes that you pay and increase your income, you got more money to reduce your debt. And when I use this program, we can figure out which debt's going to impact your retirement down the road. And then we can use that income that we increased from reducing the taxes you paid to pay off that debt. And if we pay off that debt, that means the money you were spending to pay that debt is now used for your lifestyle. In other words, we can take the things that are staples in your life and make sure they don't become luxuries. Julia, what's the next question? Can this work for 30 and 40 years old? Absolutely. This works for any age. What this program does is it teaches you the questions, the concepts, and the processes that impact the financial ability of your clients to take care for themselves, care for their retirement years, and leave a legacy for their family. So yeah, absolutely. Is there another one, Julia? Are there scripts and Social Security training in the course? Absolutely. There's scripts in there. I've given you some of them today. There's scripts in there. You'll get the exact PowerPoints that we use. You can download all those PowerPoints in there. There's recordings on them. Yeah, there's a whole ton of stuff in there. But I don't understand how you solve their income shortfall. Yeah, did you address? I thought you addressed that.
I mentioned it briefly. We were just doing a simple Social Security scenario, but yeah, what you're gonna do is show their shortfall and then show how much of it you can get rid of, and that's how you get them to become a client. The other part of that is to show them how much more guaranteed income they can get for life. So even if you reposition some of their assets into an annuity and they get guaranteed income and reduce their taxation, you're showing them benefits, bam, right in their plan, right in front of them. It's so specific. It's not generic. It's not hypothetical. It's like, boom, here's your problem. And if you make this change, here's how you have less of a problem. That's why it's so powerful.
And I got a question in the chat box from a guy named Tim. He said, is there any marketing help? I'm not really sure what that question means, but my contact information is on the email you get. But the answer, will I help you understand how to market your marketing message? Will I be able to direct you to resources that I've used for years that are affiliate partners of mine to make sure you get the best price on doing marketing? Will I make sure that you have scripts to convert people for appointments? Absolutely, Tim. That's what I'm here for. The only reason I do this now, I don't have to do this now. I'm very comfortable. I could just go off and do my own thing now. The reason I do this is I've been in your guys' shoes. I've asked the exact same questions. I've had my finger on my wallet to pull that credit card out. I had my checkbook out ready to write that check and folded it and put it back up because I was afraid. Fear of loss is greater than the desire for gain. I was more afraid of losing the money, even though there's a 30-day money-back guarantee, than I was the gain I could get. And that's because I didn't trust myself. But I'm going to tell you something. No system works. You have to work the system. And that's why I told you the two things that we don't have listed here that are more valuable than anything else on here is you also, number 5, is you have Tim, and number 6, you have me. Julia, is there any more questions? Because we kept people on a long time. Oh, I guess there was 2 more. Can this system help sell life insurance? Did we already do that one? We already did that one, right?
Yeah, I already did that one. Yeah.
Can you print
reports? Yes, we can print reports. Yeah, you can print a detailed report. It's about 10 to 12 pages at most, so it's very simple. But I'll tell you this. I've talked to a lot of big producers, guys that do 25 million, 30 million, even 40 million. Guy Craig Randall does over 40 million in production. All of them tell me they don't give printed reports because they don't want them shopping it around. Make them come to you live. Make them look at their picture live on the screen. That's how you got them tied to you But yeah, if you're the report route, yeah, you can do it. If you need a fact finder, we have one. If you want to do it that way, it's just a tool. Use it the way you want. But the big producers, most of them don't give the reports.
All right, thanks, Tim. Anything else, Julia? Okay, I think this is all the time we have. Can this be used to propose Roth conversions and cash value life insurance?
Yes.
Tim, I'll throw that back.
Yes. I'll just say yes. We don't need to go into it. You'll get that on the training. Get on there and we'll show you how to do those things.
All right. I think we've kept you on here long enough. I really appreciate everybody sticking on here. So the last thing I want to say to you is this is about you, not us. And it doesn't matter how great the program is if you're not committed to doing something different with your business. So let's talk about what you're going to do anyway. You're going to wake up in 2019 and you're going to buy leads anyway. You're going to make phone calls to schedule appointments for those leads anyway. You're going to ask questions anyway. You're going to present a product and a price anyway. And you're going to go for the close on everybody you can with what you know right now anyway. The only question you have to ask yourself is if you do the same thing, if you run your business the same way, if you make the same decisions in the next 12 months you made in the last 12 months, is the income you'll have at the end of 2019 the income you were expecting? Because if it's not, what are you going to do different? You need to jump on board right now. You need to take the opportunity to work with Tim and I. You need to set aside at least 1 hour a week and go through each and every one of the lessons in our program. You need to download the scripts. You need to look through the PowerPoints. You need to watch the videos. You need to practice the software. You need to take that video that comes every week that shows you how to use that software, and you need to practice it. And when you run into a problem, and you should run into a problem, you need to email Tim and I. You need to get on the phone with us. You need to solve that problem. And you and your family need to make more money. You have a right to it. You deserve it. Your family deserves it. And your clients deserve it. I wish we could take more questions. I don't think we have any more time. We've kept you guys on here for a long time. Really loved working with you. Jump on board, and we'll see you on the other side. You're all going to get an email. And it's going to give you a link to go jump on board and become a part of the program. Anyway, anything else, Tim? I'm going to jump off.
No, that's it. I just looking forward to working with anyone that can get on here, and you won't regret it. This is awesome. It really works.
All right, guys, take care.